Good morning, everyone, and let me add my welcome to this inaugural conference on the international roles of the dollar. Thanks to everyone for participating, lending your expertise on this important topic. As Beth Ann indicated, this is the first use of our new Martin Conference Center, and I really hope you enjoy it. So the international financial and monetary system that emerged after World War II has been defined by the centrality of the dollar. It's the world's reserve currency and the most widely used for payments and investments. As outlined in recent work by Federal Reserve Board staff, this global preeminence has been supported by the depth and liquidity of U.S. financial markets, the size and strength of the U.S. economy, its stability and openness to trade and capital flows, and international trust in U.S. institutions and the rule of law. And Professor Barry Eichengreen will expand on some of these themes later this morning, I guess. The dollar's international role holds multiple benefits. For the United States, it lowers transaction fees and borrowing costs for U.S. households, businesses, and the government. Its ubiquity helps contain uncertainty and, relatedly, the cost of hedging for domestic households and businesses. For foreign economies, the wide use of the dollar allows borrowers to have access to a broad pool of lenders and investors, and that reduces their funding and transaction costs. The benefits of the dollar as the dominant reserve currency have, of course, generated an extensive academic literature, and yesterday's paper on the Treasury market by Alexandra Tabova and Frank Warnick extends that work in meaningful ways. The Fed's strong commitment to our price stability mandate contributes to the widespread confidence in the dollar as a store of value. And to that end, my colleagues and I are acutely focused on returning inflation to our 2% objective. Meeting our dual mandate also depends on maintaining financial stability. Our commitment to both the dual mandate and financial stability encourages the international community to hold and use dollars. The wide use of the dollar globally can also pose financial stability challenges that can materially affect households, businesses, and markets. For that reason, the Fed has played a key role in promoting financial stability and supporting the use of dollars internationally through our liquidity facilities. The central bank liquidity swap lines provide foreign central banks with the capacity to deliver U.S. dollar funding to institutions in their jurisdictions. And the Foreign and International Monetary Authorities, or FEMA, repo facility allows approved account holders the option to temporarily exchange their U.S. Treasury securities held by the Fed for U.S. dollars. These facilities serve as liquidity backstops so that holders of dollar assets and participants in dollar funding markets can be confident that strains will be eased when these markets come under stress. That assurance, in turn, mitigates the effect of such strains on the flow of credit to U.S. households and businesses. Both facilities enhance the standing of the dollar as the dominant global currency. The swap lines were extensively used during the global financial crisis, the 2011 euro area debt crisis, and the financial turmoil at the outset of the COVID-19 pandemic in 2020. And the paper on central bank swap lines, presented yesterday by Gerardo Ferrara, Philippe Muller, Vishnawat Natraj, and Yongchuan Wang, provides novel micro-level evidence on the usefulness of swap lines in providing cross-border liquidity to support the real economy. Looking forward, rapid changes are taking place in the global monetary system that may affect the international role of the dollar in the future. Most major economies already have, or are in the process of developing, instant 24/7 payments. Our own FedNow service will be coming online in 2023. And in light of the tremendous growth in crypto assets and stablecoins, we are examining whether a U.S. central bank digital currency would improve upon what is an already safe and efficient domestic payment system. As our white paper on this topic notes, a U.S. CBDC could also potentially help maintain the dollar's international standing. As we consider feedback from the paper, we'll be thinking not just about the current state of the world, but also how the global financial system might evolve over the next 5 to 10 years. The paper by Jikai Chen and Asani Sarkar, which is on today's program, and our distinguished panelists on this topic this afternoon will provide important insights on this issue. So, to summarize, I'd like to stress the importance of the dollar to the U.S. and global economies and the financial system, financial markets. It's critical that we understand the channels, connections, and effects of the role of the dollar. I want to thank all of you for taking the time to join our discussion today. This conference brings together world-class researchers, practitioners, and policymakers dedicated to understanding and addressing these vital issues. and I do hope you're enjoying the conference. Thanks very much.